Alright, so in this video I want to talk about my December P&L, so closed trades for December. So it's a total of 1416 USD that I closed in December, so better than November for sure. Not as good as March of 2021 or even February or even January. The average seems, if I look at the average for the year, the average is about 1859, so it's actually lower than the average. Now I still have a lot of positions open. I've got all these positions open here and a lot of them are rolled really far. But let me go over the trades that I closed for December. Alright, so anything that has a close date of December is what I'm going to go through. I've got 25 trades that I closed. Alright, so the first one here is ZS. It was a put spread, 310-305, open November 30th. It was an expiry of December 3rd. Closed December 1st. So this was an earnings trade. So if we look at the chart here, November 30th, we'll probably have to do a month here. November 30th, maybe even 6 months. So November 30th, the stock was trading at around 346. And then I sold the 310-305. And then December 1st, it closed at 318, but it actually flew. It actually went to maybe 370, 380. So the trade was a winner. I was able to close it for 7 cents the next day. So these are my favorite kind of trades. I opened the day before, closed the next morning. So open for $1, close for 7 cents, $80 net profit. Although it does say here on the chart that it closed for 318, but it actually went up. Here, let me zoom into the chart. It actually went up that day and then dropped at the end of the day, which is a good thing. I closed the trade and didn't just try to let it expire worthless. It came close to 310 actually. So December 1st is over here. If we look at the little box over here, so December 1st, it opened at 371. The high was 373, but then it closed at 318. So that's what I mean. So good thing I closed it. So we had some volatility in December, so I went back to selling the SPY put spreads that I like selling every Monday, Wednesday, Friday. So November 26th, I sold a SPY put spread at 440, 435. Here, let's look up the SPY here on the chart. Let's go back to, I guess I can keep this chart, it's not bad. All right, so what am I looking for? I'm looking for November 26th. This is December. November 26th is right over here. So as you can see, SPY opened at 462, had a low of 457. I opened a SPY put spread at 440, 435, expiring December 23rd, collected 85 cents. If we go to December 23rd, we can obviously see that SPY was trading at 470. So it could have expired worthless. I did end up closing it on December 7th. So 11 days later, December 7th, SPY was trading at 468. I closed it for 40 cents. But obviously after commissions, I'm left with $32. I closed it for more than 50% profit. And then December 1st, if I go to December 1st on the SPY was trading around 450. It actually moved a lot from 464 to 450 the same day. Pretty wild. All right, so I opened a 430, 425 put spread for 90 cents. So that's a good entry actually. So 430, 425 on the SPY for December 29th. If we go to December 29th, the SPY was trading at 477. So this one would have expired worthless, but I ended up closing it for 35 cents on December 7th. So you see, I closed all the SPY put spreads at the same time, probably saving on commissions. I closed for 35 cents in 6 days later, so that gives me a net profit of $42 US. Next here, SPY, November 30th, another SPY put spread, 436, 431. So November 30th, SPY was trading at 455. I sold a put spread at 436, 431 for 85 cents, expiring December 27th. Now December 27th, SPY was trading at 477. So this one as well would have expired worthless, but I ended up closing it 7 days later for 30 cents. Giving me a net profit of $42 US. Next here I've got Nvidia, open December 6th. So let's go to Nvidia, NVDA. Nvidia December 6th. Nvidia December 6th is right over here. It was trading, it had a low of the day of 280, but it closed at 300. So 20-point swing. So obviously at 280, I'm pretty sure my entry was when Nvidia was at 280. I tend to put exaggerated orders and just leave them, limit orders, and if they fill, then they fill. So 240, 235 was my put spread. So my short strike is pretty far. As long as Nvidia stays above 240, then I win. Collected $1, and I ended up closing it the next day. So see, 1 day trade. I opened it December 6th, closed it December 7th, the next day for 37 cents. And I think I'm not sure if I made a video about this, but if I had played this naked, it would have been like a $300 profit. It was very annoying that I could not play it naked. Instead, I did a put spread for $1, closed for 37 cents, giving me a $50 net profit. And now Nvidia, what was the expiry? The expiry was January 21st. So yeah, so it's too far. I can't see if it would have expired worthless, but most likely it would have expired worthless. All right, next year, American Express. I did a put spread at 140, 135 for $1, expiring January 21st. I closed it 7 days later for 37 cents. That's a $50 net profit. Let's look at American Express. I mean, it's not super volatile, but because it dropped a lot, I was confident in entering this trade. So 140, what was the entry? November 30th. So I made a lot of entries on November 30th. Beginning of December, it was very volatile. So November 30th, American Express was trading at around 152. And even the next day, it dropped a little bit lower. But then I was able to close it when it climbed back up on December 7th. So I closed it around here, December 7th, when it was trading at 166. So it makes sense. So opened for $1. American Express closed for 37 cents as well, $50 net profit. And then I had another trade on the triple Qs, so similar to the SPY, the Monday, Wednesday, Friday trades. But this one failed on the Qs, 370, 365 for 90 cents, expiring December 29. Now let's go see what the Q is trading at. So the Q, December 1st was trading at 387, and I sold a put spread at 360. Sorry, 370, 365 for 90 cents, and expiring December 29th. Let's see what the Qs were trading at. December 29th, it was trading at 401, so it would have expired worthless. But I ended up closing it 7 days later for 37 cents, giving me a $40 net profit. Next year, RH was an earnings trade. I love earnings trade when they go well. How come it's only $80 profit? That's weird. $1 minus 7 cents after commissions puts me at $80. Wow. All right. So put spread on RH. I opened this right before the close, before the end of the day. 515, 510. Here, let's look up RH. So RH was on December 8th. So December 8th, RH closed at 576. At that point, I did a put spread at 515, 510 for the same week expiry. So it had a few days to go, and I'm 60 or 50 points away from the current market price. The stock could drop, but I mean, most of the time it doesn't drop more than expected move. It does sometimes, but most of the time it doesn't. In this case, it went up a little bit. So as you can see, I collected $1. And then the next day I was able to close it for 7 cents, giving me an $80 net profit in 1 day. And December 8th, we could see actually it closed at 576. The next day, it went up a lot, not a little bit. It opened at 625, so it made a huge move up. It even had a high of the day of 658, but then it dropped back down and closed at 608, but still pretty far from my short strike of 515. I think this one could have expired worthless. December 10th, it had a low of 582, getting close, but it would have expired worthless. But I don't care. I like to close my trades as soon as I can. Here I've got Lululemon here, December 9th. This was also an earnings trade, expiring December 10th, and I closed December 10th as well. So it was a 385, 380 put spread. Let's look at the chart for Lululemon. So Lululemon, December 9th. So December 9th is over here. Lululemon was closed at 416. So at that point, I did a put spread at 385, 380. So about 30 points away from the current market price. So Lululemon still had 30 points of margin to drop, and it could still, before I start losing money on this trade. Instead, what happened the next day, it dropped a little bit, but it opened at 410. It had a high of 421. It had a low of 402. and it closed at 409. So it would have expired worthless, but I ended up closing it for 8 cents, giving me a net profit of $79 overnight. Next here, I got a Chewy Earnings trade. I did a naked put on Chewy for earnings. So Chewy, December 9th. So this was at the same time as Lululemon. So December 9th, Chewy was trading at 56. I sold a 45 put for $1. It was pretty volatile because I'm 10 points away on a $55 stock, and I was able to collect $1 with a 1-day expiry. That's ridiculous. That's why I love earnings. So $1, 10 points away, and then at a 45 strike. This one, as you can see here, 0. I let it expire worthless because it was too obvious that it was going to expire worthless. So December 9th, collected $1. I let it, and then the next day it dropped. Actually, the next day it dropped to 50, had a low of 50, and it closed at 51. But it was still 5 points away. $5 on $50 on a $50 stock is 10%. So it wasn't going to drop 10% intraday. So I let it expire worthless, and even if it did drop below 45, I would not mind rolling it. At a 45 strike, I would not mind rolling Chewy. So yeah, so this one expired worthless, so I get to keep more of the profit. So $94 net profit for this one here, Chewy. Next here, I've got a Facebook put spread. This was not an earnings trade. This is just because Facebook had dropped hard that day. So Facebook was December 1st. So a lot of stocks dropped on November 30th, December 1st. So December 1st, Facebook dropped to 310. I opened a 285, 280 put spread for $1, expiring January 21st. But I closed it 12 days later on December 13, when the stock went back up to 334. I closed it for 37 cents, giving me a $50 net profit. Next here, I've got Fedex. This was an earnings trade. So let's look up Fedex. A 1-day trade. I think I made a video on this trade. So Fedex, December 16. So right over here. December 16, FedEx closed at 238. At that point, I sold a put at a 210 strike for $1.10. Expiring December 17th, so expiring the next day. And then as you can see, the next day, the stock went up to 253, had a high of 260, had a low of 248, closed at 250. I still closed this one. I was worried about it. I still closed it for a penny. So it's a waste of commissions, but I didn't feel comfortable. In case anything crazy happened, I didn't feel comfortable rolling it at 210 because it takes a lot of buying power. So this one I closed for a penny, giving me a net profit of $97 US overnight. So the capital required for FedEx, when it was trading at when I opened the trade, the stock was trading at 238. So it's a 30% margin requirement stock. So times 30%. The difference between my strike and the current market price is 238 minus 210. So about 28 points. So minus 28. So it took about $4,300 US of capital to open this trade. So I wanted to free up the capital as soon as possible. All right. Next here I've got, so I did FedEx, Roku. All right, Roku was a put spread. When Roku kept dropping and it dropped, I think, below 200. It was an easy open. I opened a put spread at 160, 155 for January 21st. Here, let's look up the chart here for Roku. So Roku, December 15. So right over here, look at the lowest point. Pretty good entry. I'm proud of myself. All right, so it had a low of 190. Ouch. All right, so Roku, I did a put spread 160, 155 for $1. Closed it 2 days later for 35 cents. So that's a $52 net profit. Can't complain. Next year, we've got Zoom, December 3rd. I don't know what happened to Zoom, man. It got completely destroyed. Zoom, December 3rd. Zoom really scares me with naked puts because I keep imagining someone selling a naked put at 500 on Zoom. And it's right now at 183. And that someone could have been me. All right, Zoom, December 3rd. It closed at 183, but it dropped a lot that day, as you could see, compared to the past few days. So it was a nice drop. I sold a put spread 150, 145 for January 21st. So pretty far, 30 points away. Collected $1. And 14 days later, I closed it for 40 cents. Giving me a net profit of $47 US. Nike here was an earnings trade. So let's look up the Nike chart. I believe I did a video on that as well. So Nike was December 20th. So right over here. So Nike was trading at 156. I sold a 140 put for $1, expiring December 23rd. So the same week expiry, which was like a few days, 3 days away. The next day, Nike went up though. I got lucky. It went up to 160. It opened at 166. So I don't know if I closed it right away or I kept it a few days. I think I closed it the next day. Yeah, December 21st. So held for 1 day. I closed it for 3 cents. Obviously, it would have expired worthless. Regardless, I freed up the capital, and that's an $84 net profit overnight with earnings. Next year, I've got Spotify December 1st. So let's look up Spotify December 1st. December 1st. So yeah, November 30th, December 1st is where all the stocks dropped. So Spotify had a low of 224. I opened a put spread at 200, 195 for $1. January 21st expiry, and then I closed it December 20th. So I closed it 19 days later for 39 cents, giving me a $48 net profit. Next year we've got DocuSign. So I didn't play earnings, and I got lucky. I just forgot about it. I think if I had remembered it, I would have played it, and this would have been a complete $4 loss for sure if I had played earnings. There was no way out of it. DocuSign. I played it after earnings when it dropped hard after earnings. So December 3rd. So look at this crazy drop. Look, it was before earnings, it was at 233. After earnings, it opened at 154 and had a low of 131. That's ridiculous. No justification. Regardless, I opened, and even my put spread wasn't that good. My put spread was 125, 120 for January 21st. And DocuSign dropped to 131, so it wasn't even a good entry on DocuSign. But I was able to close it 19 days later for 42 cents. So open for $1, close for 42 cents. That's $45 net profit US. Next year I've got Tesla. Wasn't even the best entry on Tesla, but it was good enough. And I think I closed a little bit too early, but that's always the case. All right, Tesla opened December 13. See, it had a low of 951. I opened a put spread for January 21st expiry, 800, 790. So, I mean, 800 is 150 points away on Tesla. It's pretty good for $2. So this was a 10-point wide spread. I usually do 5-point wide spread, but there were no 5-point wide strikes for Tesla on January 21st. So I went for a 10-point wide. I didn't mind doing 10-point wide on Tesla, but in this case, I usually try to collect $1 on a 5-point wide spread. So if it's a 10-point wide spread, I'll collect $2. So that's what I did here. I collected $2. And then 9 days later, I closed it for, on December 22nd, I closed it for $1. So 50%, leaving me with a net profit of $87. Now, of course, if I had held on to it a little bit longer, I could have closed it for much better. Regardless, next year, Wayfair, December 16, Wayfair. So Wayfair dropped. I'm pretty good at catching the lows, actually. Look at this. Wayfair dropped to 184. I sold a put spread at 165, 160 for January 21st, collected $1. And then 7 days later, on December 23rd, I closed it for 43 cents. So when it was trading at around 204, I was able to close it for 43 cents, giving me a net profit of $44. Next year, I've got Coin, a Coin put spread. This wasn't the best entry. So Coin here, I opened it December 10th, right over here when Coinbase was trading at around 250. And as you can see, December 20th, it was trading at 238. So it wasn't the best entry. But my put spread was out of the money. So I still had a short strike of 210. So I still had room for error. I just held on to it, did nothing. So 210, 205 put spread, collected $1. And then December 23rd, when things came back up again, when Coin was at 268, I was able to close it for 40 cents. Giving me after 13 days, giving me a $47 net profit. Next year, I've got Netflix put spread. I mean, everything dropped, so I had to play Netflix. One of my favorite stocks to play. So Netflix was December 14, was right over here. Wasn't the best entry because December 17, it dropped even more. So December 14, it was trading around 590. I opened a put spread at 535, 530, so pretty far. Everything was volatile. For January 21st expiry, collected $1, and then 9 days later on December 23rd, when things came back up again, I closed it for 42 cents for giving me a $45 net profit after commissions. Next year, I played on December 15, I sold a naked put on Lightspeed. Now, all these trades I share in my WhatsApp group, the trade alerts. I share everything. So if you were part of it, you could have easily played it if you had the buying power and if you wanted to play it. At the same time, you probably would be stuck with these trades as well here. So not all my trades are profitable, but as you can see, most of them here were profitable. We're still holding these ones. Whoever took these trades, not Bubba, but Square, Fiverr, and Dash were part of the trade alerts, of course, and we're still holding on to these ones. All right, so going back to the trade here, Lightspeed, it's LSPD. So right over here, December 15. So this wasn't even a good entry. So I opened it when Lightspeed was around 39. I took a 30 strike, so pretty far, 10 points away. Collected $1 for January 21st expiry. But as you can see here, December 20th, Lightspeed dropped even more. So I could have gotten a better fill. Regardless, 12 days later, so on December 27th, over here, when Lightspeed went up to 42, I was able to close this for 40 cents, giving me a $48 net profit. So 50%. Profit. Next year, I've got Adobe that I opened December 16. So Adobe December 16 was trading at 566. This was after earnings. I did not play earnings on Adobe. I forgot. I got lucky this time. Two earnings that I completely forgot, and the stock just dropped. So I played Adobe after earnings for sure. It went from 630. It closed at 630 and dropped all the way down to 556. If I had played earnings, my strike would have been at 590. So I would have lost on this earnings for sure, because it ended up closing at 566. So I played Adobe for January 21st expiry after it dropped to 566. I had a 520, 515 put spread on Adobe. So pretty good. Collected $1 and then closed it for 41 cents 11 days later. On December 27th, when Adobe came back up to 577, 580, not even that high. So that's a $46 net profit. But I wanted to close some trades because I did have a lot of open trades. So just in case something happened, I don't want to have too many open trades. So I took profits where I could. Next year I got Fiverr. So I already had a trade on Fiverr here, 115, 110, but then it kept dropping. So when it dropped some more, I opened a new put spread even lower. Same expiry, but different strikes. So 95.90 was my put spread on Fiverr, December 15. So let's look up Fiverr at VRR, December 15. So it's over here. Is it? Yeah. So it had a low of 110. I opened it for 95.90, and even the next day would have been a better entry, actually. Next day it dropped to 110 as well. But it closed at 113, okay? December 15, it closed at 120. But I had an entry probably most likely when it was trading at 110, because I tend to put exaggerated orders and leave them. So 95.90 for $1, January 21st, closed it 15 days later for 45 cents, giving me a net profit of $42 US. So December 30th is over here. Fiverr went back up to 117. That's how I was able to close it. Next, the last one here is Etsy, closed December 30th. So I'd opened December 10th. So let's look up Etsy here. So Etsy December 10th was not the best entry, but pretty close. So Etsy was trading at 222. I sold a put spread at 195.90 for $1, January 21st expiry. I closed December 30th when Etsy was trading. It wasn't even the best close, actually. So it was trading around 226, but I guess because time went by, I was able to close it for 45 cents. So 20 days later, so a little bit over 50% profit, but because of commissions, I'm left with $42 US net profit. So that gives me for the month of December, if I highlight all the December ones, a net profit of $14.16 US. So not bad in terms of closed trades, but the problem is I've got a lot of unrealized losses here, which I'll make a video just for the unrealized losses or the trades that I'm holding, with how much unrealized loss it's actually giving me. But yeah, so that was the month of December. And like I said, the average here, let's look at the average for the whole, since I started tracking my trades. So if I start from July, December, and then January to December 2021, sorry. So I've got an average of 1614 US. So this is close trade. So it's like the income. It's as if I had dividend stocks, and the dividend stocks that I'm holding dropped, but they're paying dividends. So this is like the income that's being generated from my holdings. So 1614 US per month, not bad. Could be better. If I don't include September and October here, and I start from November because I changed my strategy a little bit. September, October, I was selling call spreads to mitigate put spreads, but November I started rolling put spreads that were getting breached. I tried to save them, and I started doing more naked puts. So if I start from November and then continue here, I've got an average of 1891, not bad. Obviously, November 2021 wasn't good, $500 only. I got stuck with buying power issues. Looks like August as well. December, I did a lot more put spreads because I had no buying power for naked. So I just did a lot of put spreads, and it wasn't bad because, as you can see, all these put spreads added up. They're all small amounts, like $40, $50, but they added up because I did so many. And I was able to do so many because they're just spreads, and I entered on different underlyings and different timing as well. So it's really all completely different trades. All right, so just want to share with you my December P&L. So if you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. Thanks for watching.